The stock market is ever changing, but the truth that cheap businesses make better investments is based on the one thing in stock markets that never changes: human nature. Investors tend to become overly pessimistic when news is bad, and companies often fall well below their true value. The Schroder Recovery Fund uses bad headlines to make good investments by focusing on equities and equity-related securities in the cheapest parts of the UK market. The starting point for our process and idea generation is a simple valuation screen. Company profits tend to go through strong and weak periods, and our process seeks to estimate a normalized or average for those profits over time. Once the company passes through our valuation screen, the hard work begins. We employ a consistent and robust approach to estimate what we think the fair value of that business might be. To estimate fair value and help identify value traps, we use a checklist that we call our 7 red questions. We consider things like potential unseen liabilities, balance sheet strength, environmental, social, and governance factors, profitability, and any structural threats that a company may face. The process allows us to not only provide an estimate of fair value, but to make a considered judgment around the risks and challenges that a business faces. Once we identify stocks with an attractive risk-reward balance, we will then consider adding them to the portfolio. Our position sizes are determined according to risk and diversification priorities. The largest positions in the portfolio tend to be those with the lower risks. The fund invests in the equity of listed companies, and as such, invested capital and income received can go down as well as up. At least 80% of the underlying holdings must be in UK equities, and a maximum of 20% can comprise cash and/or securities listed outside of the UK. Equities will tend to display higher levels of volatility than some other investments, and as such, the fund should be viewed as a long-term holding. Exchange rate movements may also cause the value of investments to fall as well as rise. Although ESG is not part of the fund's objective, ESG is integrated as part of the analysis, and ESG factors are considered as part of the 7 red questions stage of the investment process, with one of the questions specifically focused on understanding ESG risks. This fund will consistently adopt a value style and is often used in portfolios to provide a counterweight to more growthy strategies. The two styles sit at the opposite ends of the valuation spectrum, and as such can often complement one another. The fund provides exposure to UK companies, which in our view are currently trading considerably below their true intrinsic value.